Okay, hi there, guys. Just let me know who's in and who can hear me. If I'm coming through clear enough. Better get a few things up and running. So we're just waiting for people to come in at the moment. Okay, let's just get up and running. Welcome to TradeSetup, the live stream. Assume you can hear me good. If not, just let me know. I see my mouse moving around without any conversation, so if you've got a problem there, just let me know. Welcome. If anyone that's new watches this later on down the track, feel free to join us. You got Twitter at trade_setup. We have Facebook link on the top right, and subscribe to us at YouTube, the bottom right hand corner. Now, we're going to do a talk. Well, I'll be doing a talk next, I think it's the 11th. So, is it Wednesday week? Wednesday week. Yeah, it's Wednesday week, about 7 p.m. on Sydney time. So, anyone that wants to join in, you will get notified because it'll be going through, it'll go through YouTube. So, that'll go live. You'll see it, but that'll be live at the time of the event. If anyone wants to join in, you can just go to Meetup, and I'll put our Meetup. I've got our links. Sorry, I'll get rid of that. Links for everything will be on TradingView. So here is us on TradingView there. If you just go, you join in. Or look, it's a good idea if you don't have TradingView, sign up to the free version. It's well worth it. But on each one we do at the moment, you'll see a whole lot of details at the bottom there. So that's our free event there. If you click on the Meetup group, it'll take you to the actual event. You can either sign up or you can just log into it there. So there's a whole lot of bits and pieces on there. So that'll be the talk on Wednesday the 11th at 7 p.m. Bit of a lecture, probably more of a rant knowing me. But yeah, it's well worth joining in. And like I said, if you subscribe to us at YouTube, you'll get that automatically once we kick off at 7 o'clock. You'll get a pop-up anyway saying it's going live. All right, let's get rid of that. By the way, also general advice, what we talk about is only general advice. It's not, we don't take into account anyone's specific details with regards, it's just with regards to the trade ideas. It's only our views. So I'll minimize that and we'll get stuck into it. Let me just change something. So first things first, what we'll do today is just go over a few different ideas. Probably keep it a bit shorter, sweeter today, a bit sharper. I think it's worth just talking about different ideas and chatting through some ideas, going through a bit of a rundown of the market, where I see the markets at the moment, and then get ready just to chuck in some ideas later on that we can go through. Also, just some things that are working for us and others that are not. So yeah, we'll go over a few different trades that we've got going. To start with, well, a bit of a rundown of the market. Let me get rid of that. That's the old Bitcoin. Just put that up there. Then, so first things first is just having a bit of a review of the market. You can see that's the big S&P. That's been powering along nicely and it's into new all-time highs. It just, for me, that's more and more extended. The higher it goes, and the more likelihood it's going to roll over. But you don't want to try to pick a top of anything. It's the same with picking a bottom. Don't learn. If you're starting to find yourself picking bottoms, it's just a bad trading strategy. Well, it's not really a trading strategy at all, but it's a really bad, easy way to lose money, and very much a pure luck way to win. And there's no sort of technical reasons or fundamental behind doing a strategy like that. So this market on the S&P just keeps pushing higher, and no rhyme or reason. Whether you think there's growth, I mean, there's talk of US growth is slowing, the economy's slowing. Europe's on the dive, but they could have hit their worst. They could have seen their worst already, so they could be on the mend. It might be a place to go for yield going forward into Europe. We don't know, but either way, this market just keeps plugging higher. I'd say it's just going to go, kick on into Christmas, and we might find something to tip it over in Christmas. We don't know. That's the big S&P of the broader market. You got the Nasdaq, same sort of scenario on the daily charts. Just powering higher. It is again extended. You would suggest it's extended, but every time it sort of pushes into new highs at a little pullback, bang, it just goes again. So don't try to fight it. We just run up at the moment. Just be wary that anything can happen anytime, and just be on the safe side. Get rid of that. That's the Dow, the top 30 stocks. Well, it's 30, the Dow Jones 30. That's again into new highs. Doesn't look quite as stretched as you got the S&P, the big S&P, but it has spent some time. We've got all this chop through here. We're just getting washed out. That first move down, that was February 18. Bit of a clean out, built itself back up, smashed in September last year into December, into Christmas, and it's just been building since then. So that, if we can't, it's the way the market does it time and time again. If you have a bit of a pullback, just to take some heat out of the market of this bull run, and it consolidates, hold the lows, and it starts to go again. That's October. What am I talking about? All right, 2019. No, that's right. And then we can't get through anything convincingly or start to run out of steam again. Then it takes a bit of a nosedive, clean out a few more trades with a deeper correction, and then starts to reset. Well, not really reset. This thing just bounced straight back and started holding high lows all the way back up again. So that's on the Dow. I mean, the S&P, same big clean out there. That was in September last year when we had that big correction. And again, since then, it's just been holding higher levels. You had these little washouts lower just to clean out a few of the late buys. So on this pullback here, you get the ones that bought late into the trend up towards the high, looking for that run through the highs, are getting squeezed out, and it turns around and runs through the highs like they expect. But it's got to keep doing that, squeezing people out and rallying, squeezing people out. So whether we're due for another, deeper correction from here, then sort of resetting, it's not what I wanted, and then going again, we'll soon see. But again, it's all about what's happening in the US. Trade is the main focus, as we all know. Trade is what everyone's got their eye on at the moment. And just recently, I think the market had a bit of a sell-off on Friday night in the US when they come back online. It was a shortened session too. They had Thanksgiving on Thursday. So first thing Thursday morning, I think before Trump headed to bed, he put out a tweet saying they're signing that Hong Kong bill. And it's really just stepping on toes of China. They're supporting the protesters in Hong Kong. He signed something, legislation in support. So our markets reacted a bit, but nothing. We didn't get a severe reaction, I think, on the Thursday. And then obviously they will close Thursday night. Europe was okay, and then when they come back on Friday, the markets weren't doing too bad right up until the open of the US session, and then boom, they got smacked around. Obviously, I think the DAX did open a bit weaker, and the FTSE opened a bit weaker. The DAX did bounce back because they had some decent numbers in Germany anyway. That's the powerhouse of the Euro, or the EU. They had some good unemployment, so the unemployment was a lot better than expected. Unemployment data came out, so that lifted the DAX, but it did push into the green during the session, but it couldn't close in the green. So that's, again, it was weighted down by trade, and then the US sank on the open. They got hit a bit, knocked around a bit in the US. They come back from a holiday, saw the news, reacted to the news, so you probably would have expected that. Closed down on the shortened session, and then we've opened up. We actually opened up a bit weak, then boom, up we go. So our market's about 30 or so at the moment, so it's not quite the reaction you may have expected. And it looks like we're setting aside any sort of trade issues and still expecting a deal to be done by the end of the year, or hopefully by the end of the year. But it's just every day it ticks on, and now that we've got potential, pretty much everyone's waiting for a reaction or repercussions from China. What are they going to say? So they come out and said something on Thursday, said it's not a good move by the US. They won't be deterred. Blah blah blah. Don't get involved in Chinese affairs. But they haven't come out and said anything different just yet. So maybe just waiting for some sort of response from China before either the market goes or drops. We don't know just yet. But that's, again, it's just centered around trade. So let's look at the DAX. The DAX, we're edging into these highs up here. You got this zone through all-time highs somewhere around, say, 13,500. It's pushing up there. I thought it might have run out of steam here, and it's been oversold for a while, but keeps pressing higher. So expecting this maybe to consolidate these highs and then press into new all-time highs, and then just see what happens from there. I think the good thing with Germany, like I said, their numbers. So a lot of negativity has been factored into the market in Germany, and they're looking now to potentially for 2020. There's talk for 2020 Europe to be the place to be in search of yield. There might be a flow of, well, there has been a flow out of US funds, big stock funds into global funds, and it's about proportional. I think it's just under 10 billion in the week come out, and it was about 10 billion that went into global funds. So what they're, we'll have to see. Just keep an eye on the US dollar too. If it starts to get sold off as they're exiting the US dollar and starting to put it into the euro, then yeah, I mean everything's starting to line up. You've got a strong dollar, weak euro. So if you've been playing the yield, why you've been going into US shares, and the yield differential, say stronger US currency, so you've been buying the US dollar for the yield as opposed to euro, which has been next to no yield. Starting to lock in those gains, flow back into the into the euro. Where you're going to put your money, you'd be putting it to maybe Germany, who knows, but European countries, purely because I guess the idea is that the worst may be over in the way of contraction or a slowing of the EU. It's slowed, and it's potentially going to start finding a base and start getting some good results flow back into the European Union or the European area. What am I trying to say? Into Europe, into the EU. There you go. So that could be the place to be. But then again, I mean, some of these stocks are they're not beaten down at all. US has kicked off into new all-time highs. They've been going there quite a while. The DAX is not there. The FTSE is still suffering a bit. They've got problems up sort of towards these highs at 7,440. So they're still a bit under pressure, but really, as long as the US keeps going higher, these markets going to keep finding some buyers. And as long as nothing gets said about the trade situation, nothing negative anyway, then these markets are just going to continue on their merry way and keep plugging higher. You would expect anyway. Even some of the negative news that's come out is getting taken quite well, is getting absorbed quite well. So I think the move on Thursday in the US, more profit taking than a negative tone into the market. Obviously, they've been off for a day, and anyone that's been loaded to the proverbial loaded long into the US, then look, it's a good opportunity on a shortened session going into the weekend. You never know what's going to happen, especially considering that you're waiting for China to say something. Just go on a bit of a risk-off tone, book some gains, lock them away, and see what happens over the weekend. You can always re-establish positions on Monday, later tonight, if it all starts to turn out okay. But yeah, if things start getting out of hand, there's a bit of argy-bargy. Tariffs are due, I think, on the 15th. So what's that, about 2 weeks' time? US is due to increase tariffs on Chinese goods on some further imports. I can't remember the figures, what they're expected to be. So, it was about a month ago or so, they're talking up a phase one deal. Not one thing has been done with it. Yet the market is still going higher on the back of something that hasn't happened, that they promised was going to happen. So it's a fickle market, in my opinion, at this stage, but you don't fight the trend, it's going up. So let's look at, what else would look at? Let's look at the ASX. So that's the ASX 200. It is, we've had the same sort of thing, bit of a washout. I think that move was that was in July this year. So was that the move from, it's not right, is it? I'm on a daily. Oh yeah, no, that was a move back in September. Yeah, that was a move last year. Coming to Christmas, and we've rallied since. So we've been holding, higher levels. Bit of a flush out back in August. That flush out from the highs. I think that was the first push into all-time highs, and we fell over from there. But you can see they got soaked up quite well, quite strong. You can see we pressed down, popped up, lower high, pressed down, come into sort of I guess not really a support zone, but trying to find support, built the high low, then started working back up again. Bit of another flush out. Some of these late buys flushed them back out, and we pressed higher, and we're just going into new all-time highs. Again today, I think it's up 35. So I think we are what did we get on, or haven't we? 68.93.7 was from Friday. We're about 12 points away, is that right? 12 points away. 12 points away from all-time highs again today. So it'll be interesting to see if we can close into new all-time highs, or whether we just sort of fluff around here and ease back into the close. But either way, you can see this market getting supported. So you got your sort of first support coming in here. Wasn't really anything there. It's just a low, low coming to place at 64.85, higher low, and then we had this level tested quite a few times, and recently tested before we took off into new highs at 66.22. So either way, that market's bullish. There's no way of arguing that. It's going higher. Whether it stops here, rolls over, or we have another pullback to build another higher low, and then go again, we don't know. But either way, it's well and truly an established uptrend. If you look at the weekly, this is the weekly. That was from the sell-off back last year, coming into Christmas, and the rally. The weekly is still looking good. It is getting towards that. I mean, if you look at this, the way I look at stochastics, getting a bit to overbought. That's all great, but look what last time it was overbought was trading around 6,200 and got all the way up to new all-time highs above 68.50 when it was overbought territory. So it's not a reason to sell. It's a reason to be cautious, I'd say. But the market, when it pulls back on the weekly, it got soaked up quite well. You got divergence here. If you look at that, divergence on the stochastics, not sort of on price too, but you had that another test lower before it squeezed back up. So where to from here? On the ASX, for me, it's kind of a tough one to look at. I mean, once you get into all-time highs, everyone's a winner, and markets will just keep playing away until really it's going to be news-driven. So that's why it's important just to keep an eye on the news, and I think that's why, that is why the markets are reacting to the news quite a bit on trade, because they know that's what's pushing it. They need to sign a deal, and if they can't sign a deal and things rather than get better, they get worse, then expect a bit of a sell-off. I would be expecting some sort of sell-off and the profits to be taken pretty quickly on all manner of markets. And you saw, if we go look at the things that are linked, let's just go to a different chart. Apart from the last, this is copper. That sell-off in copper on Friday night, it's bounced on the open. I've got a feeling that was a change of contract on the futures, but either way, it got sold down. Crude got smacked around a bit. It got smacked around a lot. It got smacked down from about $58 down to below 55.50, so $2.50 thereabout, a move down. That's a big move on crude. They got not, really knocked down. But if you go back to, I think it's more of a daily chart, you can see that trend is up. It's still holding. If I just take off all this, there you go. So you can see this move up off this key low, 51.35. It's tested there before. After this, I can't remember, was that when Saudi Arabia or someone got bombed? Something gapped up in the open. It sold all the way back down to 51.35. So I sort of discount that pop up there, although that move does trigger stops. So you've got to take it into some sort of account. You can't just discount it because it's gapped up and then on the back of news it didn't really happen, and then it's sold off. You still got to take that into account, but I don't take it as a clear level. The previous high was the one I'm looking at 60.75, but the move up off that low has been quite consistent. Every time it gets a decent pullback, it gets bought back up. Decent pullback, bought back up. This is the most recent decent pullback, so we're just going to keep an eye on to see how that reacts back up on the shorter term. So if we get into, say, an hourly chart, just see how this, if we can hold an inside higher low. If we do something like, say, this, then I would expect that to hold a key higher low, and then you got some sort of move up, back up towards these highs, potentially into new highs, but just keep that trend up. So that's crude, but either way, that's linked to what's happening with trade, and they got knocked around. Copper got knocked around, but like I said, I think the fact that it's more profit taking than anything else. You got these moves up at the low, bit of distribution up here, you got a lower high coming to play, and then boom. Anyway, there would have been quite a few stops under these levels if you're long from last time it tested its support at around $55 last time, or even off this higher low. This extension here, if you haven't taken profits, you'd have quite a tight stop you would expect, and that's why you just get this run lower. What else? We've got gold rallied. So it's quite a decent little run up off in gold. And what I like about gold at the moment is that we're getting these key levels starting to hold, some quite good price action. So we've mentioned this before. I just want to take a step back. So the most recent price action, actually, let's go right back. What am I on? Futures. I'll go to a daily. Yep. So you can see that this action here, although the market's heading down, it's not overly bearish. So you've got, the market does it time and time again. If we can just, I just want to draw this in a different color. So I'm got to get quicker at this. So you can see the market's pressed up and then it has a longer term correction when you've got correction, pullback, whatever you want to call it, when the market sort of grinds lower, but it's not, when you get an expansion higher, or it could be lower, an expansion lower, and then you get corrective action that's well contained, is a bit more controlled. I don't mind seeing that. And that's essentially what I think we're seeing now. We had that another expansion high. You can see the moves up, extended, consolidate, extended, consolidate, extended, consolidate, and we started. And the next time we extended up here, we fell apart, started falling apart anyway. Once we got up to sort of that 1560 mark, and we started to go in that corrective mode. So now that to me is all part of a corrective mode, a longer term corrective mode. So it'll be interesting to see where we do pull up and what that might produce. So if we go back down to the 30-minute chart. So remembering we're in pullback mode at the moment. So you've got a lower high in the play here, which is pressed down. So this is essentially a double bottom now because you've got this higher low that's confirmed. So once you get, the market's pressed up, you found some sellers, it's retested there. We've got a little of a washout here. And then you start pressing down and then you get lows coming into play, a retest of those lows and then fails. And then you get a high low coming into play. And that high low is confirmed once you get through that sort of well, I don't know if you can see that level. So once you get that press up, pull back, again, retest, and then starts to press up again. To me, that's a good little bullish sign. And I'm expecting where we could just press up and at least retest 1476. And it'd be interesting to see if this support through 1460, say, can get us through that resistance zone, which maybe start to suggest that this correction is starting to get to a point where more and more buyers are stepping in. And that's all it is. The market's got to correct. It corrects lower. That initial push down is met with some buying. People who still think the bull run's going. And we're going to go back to the daily on the theory behind all this. Go back to the daily. So that initial pullback, you've got buyers maybe missed this, or they've done quite well in this move up. When it pops back up, they're going, okay, the bull run's still intact. Let's buy it. Get your setup, up we go. And then you build a lower high and they get cleaned out. Then you get sort of that next phase of that buyers start to step in. But the idea is that because you've had that secondary push lower, they start running out of steam. There's less buyers. So the less buyers willing to step in to support lows, it sort of eases off. Sellers come in and they start pressing it lower, until you get to that point where it starts to go back again, as in it gets to lows enough and they get some sort of technical pattern or support, whether it's fundamental, the trade deal falling apart, it's a reason to buy it, or technical indicators saying that the selling pressure is starting to run out of steam on this way down. So sellers are keen here, probably keen here, but the further it pulls back, the more it corrects, the less keen they are. They're either bought it here or they bought it here and they're holding, or the sellers, anyone that bought it late in the trend is out. So you start to run out of fuel for that pullback, and then it becomes more appealing at slightly lower levels for buyers to step back in again. And that's what we're trying to, using the lower time frames. We've got this rally on the daily, corrective price action on the daily, and we're trying to use the lower time frames, whether it's the hourly, 30-minute, whatever you want to use, to try to find a zone where it's showing some good signs that we could be finding that support. Previously, you might have got it through here, retest, but I don't call that a serious retest. And then we got that little pushback, retest the lows. This move here, yeah, okay, we're not going any higher. It started to fail and it got sold off, lower high. Then we pressed all the way down. Whether we get that same thing again with this level takes us retest 75 before we fail, or we get a deeper move up or a better move up to say 1490 before we do something like this. And if you can see that sort of move through there, then you get to different levels up here before we start selling off again and taking out these lows down at 1450. We don't know. All we can do is start to look for entries potentially on the long side, because theory is this high low should hold and should take us to at least a retest of 1476 or through, and then see what happens and then manage your risk on the way. And it's also, things like this, it's really convenient to start looking at what the consensus is, and the consensus could be shown up. It could start to show up in your gold stocks on the ASX, or if you're trading US gold stocks, what are they saying? Because obviously the US, if you look at Aussie gold stocks, they've been locally anyway, they've been selling off, and they're sold down off the highs after they had this, that big run up in gold when it got to, was it 1565? That was euphoria then. And then they started to slowly come down as gold started coming down. Now, if they're at a nice prime position, they could be attractive. If you start to see them pick up with some volume, then that could add to the bias of being long on gold. But either way, we'll just keep an eye on that. I thought I'd just touch on that while we're chatting about it. So that's about it. I think gold, like we're saying, so a lot of the trade-linked stocks took a breather on Friday. Stocks, commodities, your gold, your copper, and your crude mainly took a breather. Profit taking, they were all rallying through the weeks or the previous weeks, doing quite well. And then it just got to the point where, okay, risk off tone into equities, going into the weekend, and with a bit of news that's come out, it could turn negative. If it doesn't, then at least they got hammered. They're down and low again. They can start accumulating and pushing it back up. No harm done. But if it does get worse, then they're already out, booked a profit, especially on crude. When you look at crude, with this mood, if you're looking at here, you've got like a tight stop. I mean, if it's going to be bullish, it should just keep going. You shouldn't really get cleaned up, or you got your stop under 57.12. If you bought it here, you've been accumulating. See, there's sort of that pullback, accumulation, distribution, pullback, accumulation, distribution up here. Okay, and we got bang. We could do something like this or this or this around here, and then bang, straight back up. Take out the high slightly at 59, and then same sort of process. Bang, 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 sell off. Okay, so we'll just keep an eye on that. What those sort of those indicators, I'd say they're indicators, what those commodities are doing, and what that could be telling us for the sentiment of the move or of the trade. If they're getting smashed, then the sentiment's not too good. If they're looking bullish on crude, copper, and gold, or gold negative actually, but crude and copper especially, they're looking bullish, then the sentiment is better, or the general consensus is that a trade deal is going to be done by the end of the year, and then we could be happy to keep jumping into stock positions or anything that's biased up, or biased up anyway, on the positive news. So that's it. Let's look at, before I get too carried away, I've got a couple of shares if I can do it. I'll start off with, I haven't really looked at this as WiseTech. I'm looking at this more of a bit of a short. I mean, it could be, it may or may not be, but this is one I thought I'd just pop up there. You can see that volume has sort of increased. It's picked up here. I'll go down to the daily. The reason why I don't like it, if we draw it up on the daily, but while you're looking at it, while we're just going through a couple here, guys, feel free to put in any codes you want to have a quick look at. It can be a currency if you like. It can be some Aussie shares, anything you like. Just whack them in and we'll have a look. So that for me, well, take that back. There's one sort of support zone through here. Okay, it's probably your longer term. If we look at that, more your longer term weekly support zone, and it's just touching on there now. But if you look at the fact that you got your high lows in play, higher lows, and the most recent one, all right, don't know what happened there. Let's get rid of that. Must have hit a button. Interesting. Anyway, so that's your most recent leg up, and then we've powered through. So if you're looking at the way of anchors and anchors broken, potentially that's just broken anchor with this little move down, and that's your anchor to the leg up. So that's your most recent leg up. If we just draw that back in, that's sort of, that's probably not as clean and cut as that. You move up, press down. I'd say that's all part of one move up here. Within the move up, so on till we get here. So we've just broken it with this little pullback down here. So whether or not that's just going to sit on that trend, it's just a bit of a flush, and it's going to start to move higher again, or whether we're going to get this move down here, we're going to get another squeeze on all these buys that are stacked up for a good part of, it's been a few years now, I'd say. Let me just check. Yeah, it's been, say, 2018, it was heading higher, even 2017. So it's been a few years now that this market's been powering higher. And sooner or later, people are going to want to take, you're going to start to get people taking some gains off the table, whether it gets too expensive, overvalued, whatever it may be. So what I'm looking at, this one, I thought there is a potential for the short. And if I clear this up, I just want to do something. What I'll be looking at, we'll drill down on this. I'll drill it down on it a bit more. Just bearing all that in mind, whether it's going to, you got two things. It's going to either continue higher, it's going to go lower. So this move down here, it's pressed it all the way down. Good flush out, so that's not a bad thing. We've broken that anchor, so we're going to keep an eye on that. Bit of a grind up here. So if we can't, from here, if this level holds at 28 and we start to work our way back down through maybe 26, or even through some of these daily lows, I'd be a bit concerned that that's going to start attacking down 24, and then the longer term traders, you can see on the weekly, because this is still holding support on the weekly, those longer term traders are put under pressure. And then you might see another big wave of selling pressure come in and really start to smack it down a bit. But either way, on the daily, this trend is down. It's struggling up here. You can see the move up. Bias, what I'm talking about. The buying pressure was up. It's getting overbought at this low level. Last time it was getting towards overbought, we're way up here. Last time we're overbought, we're even higher again, up at 39. So each time it gets overbought, sellers start to come back in. So that's sort of what, using the stochastics, what you could expect. And then the trend is down at the moment. So if we're getting to this stage where we start to grind higher and this level holds at 28, below, was it say 29.50, we may see anyone that's trying to buy it up, or they really short-term traders start to get squeezed out of the market and the market pressed down again. And then it comes to, I'd probably be happy to take an entry through these lows, just below 26 with my risk just above 28. As long as 28 holds, if it doesn't start and it starts to test up here, yeah, I think the bias is going to actually swing and it's going to be back up again, if that makes sense. Or we're going to have to start looking for longs instead. But at the moment, it's just this recent price action has got me a bit interested on the short side, just to see how it all plays out, because I just see this as a potential lower high, a key lower high, and we've got this from the highs to lows. You got this bit of a grind, and if that holds, you take from 30 down to what we're taking us 38 down to say 24, 14 bucks. If we take that from 30, what's that? About 15, 14, 16, sorry. Say below 20 at the very least, or 18 bucks. Could take us all the way back down and really a big flush out, but we'll just have to wait and see. So just keep an eye on WiseTech it is. What else have we got? WZR was an interesting one. This is only a smallie, 138 million market cap, but I don't mind this. I like especially the weekly. That weekly spent a lot of time, probably the last few years, 2018, 17, maybe 16 as well. 16, it started to find that base, retested it, held, it's down around the 4 cent mark, held down there 2017, held down there again on 2018. But as you can see, it started to 2018. It started to hold a higher level as the market was getting sold off. It was probably about August too. Yep, August. It was actually starting to look a lot better, and you can see there's a bit of volume that come in. This is on the weekly though, by the way. Volume started to come in on that little pop up in July, just before the market got sold off. But when the market got sold off, that you can see that action is what we mentioned before. It's more controlled. and you've got these highs to contend with. You've got these highs you just got through. That's your initial lift up off the support zone and retesting to some minor lower highs. With this move up in July, it's your first time you did it. So the first time people are going to be skeptical, obviously. Okay, skeptical. This move is going to continue. Where is it going to go to, and so on and so forth. But when you start to contract off that the way it did into Christmas, and these couple of, you can see these candles really rejected, and a couple of these green candles tested down, rejected. That was probably the day before Christmas, just when the market turned. So when the market did turn, it just took off. All right, and you can see the volume started coming on that rally in February. Good volume coming in. People back from Christmas looking at it. Some more good volume, but you can see that volume has really picked up this year and really sent it higher. So what I'd be looking for, go back down to the daily, is I'm really just looking for a higher low, because I see that longer term, the weekly's starting to play out nicely. We've got the contraction, market's pushed up to say 21. We got this second time it started to push up again off this higher low. It failed, and it come back down and retested, tried to go again, a lower high again, lower high, but then each time it started to get down. So what you're getting is the bulls and bears fighting it out. The bears are coming in and really soaking up any sort of minor selling, buying pressure that's lifting it. But sooner or later, you're going to get, when you get actions like that, if they're trying to put a bit of a line in the sand, I guess you could call it, a base, they're trying to put in a base, either they're going to give up and let it fall and buy at a lower price, or they're happy to keep accumulating and the seller's going to give up. And as soon as you get this break up out of contraction, that's okay. We see that the sellers are giving up the ghost. Whoever wanted to sell is done. People have been starting to accumulate it at say 11, touch on 11, 1, 2, 3, 4. And you can see that the volume on the rally, some good little volume here, good volume here, good volume here. Each time it presses down into that support around 11 cents and gets rejected, it's on good volume. So it's a good sign that buyers are starting to step in. And if we can just clear this up a bit, the good thing, it broke through that high there at around 16. It's pressed up. I think it's a bit stretched here. I wouldn't be buying it just up here on the daily. I would rather wait for your first pullback. So anyone that knows what we're looking for, if you've got contraction like this, and we're looking ideally for the higher low to play out, entry off the higher low, as confirmation, as good confirmation that buyers are in control. Okay, we can see buyers are soaking up through here, but they're not in control just yet. It's still a fight between buyers and sellers. As soon as you get that break up out of contraction, potentially like that, this kind of action, followed by a higher low, you know that the buyers are starting to take control and they're ready to lift it and start to run higher. So that's really on WZR is all we're looking for at the moment. Next one I'm just going to go over is, I think there's a couple. I'm just going to flick through a few charts that I'm looking at. Apart from probably the last few minutes, I say PPS wasn't looking too bad. The problem with this, it hasn't really, even though this market's grinding high, this is premium. So premium platform provider for, I think, funds management. For anyone that's got a big share portfolio, they can get premium, put their shares in there to do the analysis, gains, losses. You can print out reports, all that sort of stuff from them. So premium continue to put on funds under management, or Aussie dollars under management. They continue to grow. If you go back through the last reports, every time they got an announcement, they grow funds under management, which is a good sign. So it's getting a bit more popularity. I think it's only quite a small stock. It was doing quite well until it got sold off in, was it September last year, got smacked down. Right into, continued on into 2019. So that was the move down for the rest of the market. Come the start of 2019, it popped up as the market started to lift, but it continued to get sold off. So it's whether or not you think it's cheap down here in value, and whether or not the consensus is that it's value as well. It's, for what they got, if they keep growing, maybe up at back here when they didn't have quite as much funds under management, that was probably too high prices, so it's got to settle at a lower price. And generally, the market never comes to consensus. It always overshoots, with its overshoot on the upside, overshoot on the downside. The markets are never precise. So what you're looking is, if this is going to be an overshoot on the downside and it's good value, as they continue between the start of the year until now, they've continued to increase their funds under management. So it's looking a lot better value for money. And then try to analyze what's happening, I guess, since June this year. So if we go to the weekly charts, it's a bit of a tough one because it has, on the weekly, it's not looking too bad, but I don't think it's spent a lot of time. It did through here, it's a couple of months consolidating through here, lifting again. Did expand a bit, but it wasn't, how do I say, a bullish action. It was really on the weekly. It's just coming, popping above the MA. So really, this is your first time it's trying to sit back on the MAs, and it needs to hold around the 55 cent mark anyway. It needs to hold around that zone to sit on the MAs on the weekly. Otherwise, it could just keep tipping over. And then you've got anyone that's bought it up off 35 getting put on the, a bit of a squeeze put on them. But if we just go back to one thing I just want to quickly look at while I'm looking at it is just to see if this support, okay, so it's got some room to move on the downside, but it's just these moves here I don't like too much. And then you've got, okay, double top there, then you've got led to contraction, which is okay in this scenario because it did start to find the base. It still found it at 45 cents before we expanded higher again. This is a bit better move, but it hasn't broken out of that contraction. So we haven't quite got that expansion where it's broken out of contraction and it's starting to a potential it's going to hold that higher level. It hasn't. It's still going down. So there could be a move on down to 50, still hold this trend up, but then you want to see some sort of reaction high. You want to see the buy start to lift price. And if they can hold a higher level, then yeah, we're ready to dive back into it. If not, oh wait, we'll step aside and leave this one off the cards. But at the moment, the trend is up. Weekly hasn't quite done it. It's whether or not this move up here has changed the bias to the longer term on the weeklies, or are we going to start to, come under further pressure, back down to retest 35, and that way get that double bottom, get longer term players start to come in and then start to lift it. So it's really up in the air at the moment, but I think it's worthwhile just keep an eye on that. If it comes back down to 50 and we start to get this price action build where we get a higher low in play, then there's enough room on the upside, at least to make a 2-to-1 trade, I would think anyway, depending on where it's the high low comes into play and what sort of risky and associate to it. VPS, I think there's a couple more. FLC, that's probably not, was it Fluence Corporation? That's not quite that flash, it's okay. We'll just, Spark, New Zealand, that's on the rise. That daily, same sort of scenario. We've got these lower highs coming to play. Market found support around 405. It lifted. Could have been a nice entry. You can see, if we just drill down on that, just in here. Good entry, break through the highs, risk at the lows, sitting on top of the MAs. You've got your high low coming to play. Once you've retested these lows at 405, starting to lift. So it's exactly that. What we were talking about, that kind of price action or that structure is played out here off a high low. It's just where it's going to go to now, whether we're going to start to struggle up at 450 or is it going to keep going. Looking good at the moment. It's looking good still. So that's Spark. And that's probably all. I just want to go over also CBA. I do like CBA. I know banks have come under fire recently, but I think this, for me, longer term is looking quite good. And I think it could actually press back up. I mean, we're going to have a bit of, we might get some sort of reaction up at 87.50. If we get through that, the next level up is around, say, 95 bucks. But I do like that. I'll just show you the reasoning behind it. There's a couple of reasons. I mean, the price action looks good, but also Commonwealth Bank, being the number one stock on the ASX, is always going to get bought up. You've always got, 9% a month going into super funds. Generally, they've got to go somewhere, whether it's getting swept up into CBA itself. They're just lobbing into CBA as the most favoured bank. So I don't think Westpac's going to be favoured. I think ANZ are under fire a bit, and maybe NAB. So if you're going to buy a bank, you're probably going to be favouring Commonwealth Bank. ETFs, anytime they buy, say the STW, has to buy CBA as part of buying into the STW. And there's probably a few other ETFs that are buying it and helping to support price. So you got whether they're buying ETFs or whether they're buying the stock or anything, but there's still money that continues to come into the market in the way there's super as well that's going to be supportive of CBA. And I think, forgetting all about that, the actual price action looks good. I mean, this move down in terms of, that was your move up before we started to fall apart. We got our first reaction. a bigger move up, a lower high coming into play off the highs that are stayed around 95. Then the market pressed down, pressed through the lows, but you can see that 70 mark, it did press through there, and we're on the weekly. Yep, we're on the weekly chart, but it really didn't get through that, that far. It was held up quite well, and then it started to lift again. But the most recent action we've got is this lift, and it's broken out of. I'm gonna have to draw it in a different color just so it probably stands out a bit better. That's the. Let's get rid of that. That's the contraction lower. You've got a big wash out of that 70 zone. It started to lift, but it's gone right up and through. So this contraction lower or correction lower potentially is coming to an end. And then we've got this bullish price action starting to take place. And if we've got this, I'll just draw that a bit cleaner. This action here just starting to, you're probably clear on the daily, starting to lift. Happy to buy at 82. We did buy at 82. We got the lift. So if it gets through 82.50, I would suggest that don't even worry about 85. And I think you start to look up towards 87. Then again, longer term, up to 95. So that I don't mind. I really do. I like that price action. You can have quite a wide stop. It's all got to do with the weekly charts more than the daily. This correction, you can see high low. It's held the level here. High low, bit of a washout through 77, started to lift again. So everything to me is just pointing up in with CBA. I think it's looking quite bullish. And if our market continues to go, we're at 68.80, up 34 points, continues to press into new all-time highs. The US keeps going. Either way, I think we're doing quite well. And I think CBA is going to be a good recipient of any bullish action. Now, of course, the market sinks like a stone. It's going to get knocked on the head a bit, but it'll be interesting to see how it can hold up. So I do like that. I think that's a good one. Anything you want to take a quick look at, guys? I think it was a bit quiet today. I'll just quickly refresh my. If there's a stock you want to look at, we might just take a quick look at some alerts. So these are what we've been pushing out on Twitter. Sorry, on Twitter. What am I talking about? It does go to Twitter, but it's on TradingView. We had a long on gold, liked gold. That started to tick off quite nicely. Let's bring up the one. That was the alert on gold we were looking at. And you can see, just looking for this action, this level, essentially at 21.39 to hold, and the market to press through 21.55, which it did. It's retesting at the moment, so it'll be interesting to see whether it can hold that and spike higher. But this bullish action on the markets at the moment, you got the Dow has also kicked higher. Let's get back to here. I think the Dow, yeah. So this is a 30-minute chart on the Dow. It's taken off. You can see support held through here. Again, that corrective action through here lifted. That to me has got, I think it's going to blow through those highs at 28.170 tonight. But it's a good start to the US session tonight. I don't like to use the word manipulator, but God, the way this market moves, sometimes it's just set in its bullish action. But either way, that's the mini. So it's opened up, rallied. What would you say? 28.70, close to 100 points in the overnight action for the US on the futures. So you would expect the Dow to open up about 100 points if these gains hold on the futures market. Yeah, so that's. What am I looking at? What am I looking at here? Why is it so? Yeah, we'll just forget about that. So we've got Helen, TNE. How's was it your margaritas, your mojitos, Helen? How are they going? Hope you enjoyed them. TNE. TNE is just a powerhouse, isn't it? I got the feeling, I don't want to say it, that I missed this completely. Look at that. God, that's horrible price action, really. It's hard. Look, it can be really tough trading out at the moment. You've got this kind of price action where it's opened up, sold off in the session, took out the a few days of closes, and then next day, boom, straight back up again. And have a drinking problem. I think you had that before you went. What are you talking about? Join the gang, if you ask me. Coming into Christmas, perfect time to have a drinking problem, isn't it? All right, so T&E, that trading through there was a tough gig. I mean, if you bought it, say on this green candle, you bought that, and if anyone can see, I'm guessing you can all see what I'm trying to talk about. Well, for me, if I bought that, which I would have been a good entry, could have been an entry through here, but it was a bit tougher. I don't think that price action, oh, actually, that was an entry. But if you bought it through here on this green candle and then your stop was just below, actually you held in okay still. So yeah, but it was just a really choppy. And that's why it's important to, I guess, hold your stops, as long as you use stops, below the most recent high or low, or if you're short, above the most recent low or high, if that makes sense. Um, that's why it's important to know where your risk is and where you're going to be proven wrong. Not, when you've got price action that can do this and you might buy it here and then it rolls over, takes out your stop and then goes. Whereas the most recent action, your stop should have been below the most recent high low because that's where you can be proven wrong. Whereas this action here doesn't actually break an anchor at all. It's just engineered to squeeze people out of the market, put them on the sidelines for another run higher. It's not actually bearish as such. And the same with this action. That's why, if you had your stop percentage terms, which would mean that you're somewhere above this high low. I've got to go back and show exactly what I'm talking about. If you bought on that break and you either had a dollar stop or percentage stops that left you sitting somewhere above this low of that, that red candle there I'll just show you, above that red candle at say 781, which is here, above there. If you had your stop in there, you've been squeezed out. All right. That's why I always think it's important, more important for me anyway, the way I like to trade. I want to be proven wrong, and you're not proven wrong if the market breaks up, it's bullish, and then it comes back into the range. You're not proven wrong because it hasn't broken any level, hasn't broken a key level, hasn't broken a high low. It's not squeezing people out of the market. It's not doing anything apart from scaring you or putting fear in you. So and just getting those traders that do have that kind of a stop and place to it. I wouldn't buy a 10 gram position every single time because a 10 gram might mean where my stop's going to be is above a key high or low that I'm not proven wrong and I can easily get squeezed out. I would always rather have my stop below and then figure out the risk I'm placing on the market, especially with shares anyway. Yeah, it probably was an alert a while ago, Helen. There's a lot of stuff I pump out and I just forget to watch it, which is pretty sad, really. So like keep me on track anyway. But yeah, it's I think that was an important point just to remember where your stops are placed. Make sure you place them in a spot where the market's heading high. You're proven wrong here. The market's heading high. You're proven wrong here once it gets to new highs. If it starts to retrace on you and breaks any of these higher lows in an uptrend, you're proven wrong and you want to be on the sidelines. But if you're not proven wrong, you've just got to take the heat, I guess, at the time. And this big move down didn't prove you wrong. If you bought on this break, you were never proven wrong either. You're still not proven wrong. You've got a high low here. Market's getting a bit extended up here, but if it turns around, pulls back, and doesn't break this 860 zone, then the trend is still well and truly up. So if you're holding long from here, for me, my stop would be below 860. I'll be obviously thinking about a partial because you're probably up quite a bit, but just watching to see where it goes from here. And if you go to that weekly, it's right up at this 950. So it's a critical zone at the moment. So if I bought that down at say 750, I would be happy to take a partial up here anyway. What's that, 10%? Is that right? 20. Yeah, it's probably about 10 to 15% gains on the entry if you've got an entry somewhere in here. 775, $8. It's $9. If you're taking a partial up here, okay, your risk is at 850, great. Then you've got a winning trade. Watch where it goes and just manage your risk as you go. What was the other one? VIN, AKP, audio pixels. I don't like the daily. It's heading south. So what the weekly is saying, it's stuck in a range at the moment. It has to, for me, if I want to be bullish on this. And the way it's an important one to watch the recent price action too. What it's saying to you with the most recent price action, because every share can trade differently. Let's just do that again. Every share can trade differently and has different sort of nuances. So you've got this good little run up, potential retest, and then it comes back in. It seems to retest the level a few times. You get 1, 2, 3, then boom, up we go. Probably a tough one. You could have got an entry through here. In hindsight, that was easy. It's easy to say, but buying it on an entry through there, you got this run up here before, I don't know where your risk would have been, but either way, you've taken some gains on that move. And then we had lower high in play. Your key high low is here, essentially got retested with a move back down to here, retested in the start, then it lifted all the way back up to the most recent high low. If we get similar price action where we have to retest, you just expect it to retest somewhere around 1550. What are we at now? 1650. So potentially $1 lower, retest here, and then break that. So if we can hold up, say 1550, I'd love to see that hold up there, and we do the same sort of thing, retest a low. All right, and then see if we can break up. And then of course I'll be looking for that level at say $20. If it starts to break out of there, it's all about the entry. The same here. That sort of thing. Retest, 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 break, entry. Probably really hasn't happened since, but you can see what I'm saying. That's the kind of action I'm looking for. Expansion. So you got contraction, expansion. That's expansion, contraction, expansion. Maybe longer term contraction. If that's the case, we're sort of looking at this thing. That resistance off the all-time high. But either way, I still think this is a good level. And for me, this level through here, say around 1550, needs to hold on the daily. If we can hold there, and then we get some increase in volume, it's in a prime position. Stochastics are on the oversold side, and we can start to lift there. Last time it pressed up there. So if we can see this market's pressed down, it's rallied, this little rally here, and we press back down into that support zone, and it starts to rally again. That essentially is a double bottom on the daily as well. Okay, and that gives you more strength to the upside, more bias to the upside. I think that would drag in more buyers. And really start to get then it's really about the setup, and it's probably about the setup on that weekly chart. What we can see, maybe this trend line, if I take one step back, there we go, this trend line here, if we can break that and break up through, then entry, boom, entry, see if we can get an entry long, maybe something like this. I'd love to see something like this actually. Press up, if we can get it an entry, once we get that breakout through there, the expansion high, we get an entry like that, and then bang, up we go. We know exactly where we're putting our risk, put it into market, see what happens, and then just see if it does start to stall at 21, 22, or it's going to push to 26, or it's going to blast off, and then we're looking towards highs around 35. If that's the case, you go at 100% gainer, if it can go up to test that. So I think that's not a bad little one, Vin. We'll keep an eye on that. Anyway, I think that's about it, guys. Hopefully, the market, well, it's pressed a bit higher, isn't it? It's starting to look good. So are we pressed up into all-time highs? Not yet, but really. ALU. I don't like the daily as such. I think it's about the weekly. There's quite a few weeklies I'm seeing that are looking good, but they haven't quite set up. But the dailies are looking a little bit extended. I mean, something like this, I don't like the fact that it's extended on the daily. Yeah, I don't like the fact that it's extended up into a potential resistance zone at 38. I wouldn't buy that. I'd buy a pullback. I want to see a pullback if it can settle on about 35. Pull back to 35, go from overbought to 50% of it. It doesn't really matter. Take some of the heat out and then start to show signs of being supported at 35. Then I'd be happy to buy it, because then that way you've got a pullback, you've got a high low, the weekly, and then you could charge straight up through 40 and continue that longer term weekly trend up. So that's why I'll be viewing that one. If I miss it, which I probably could, like TNE, then yeah, you can start bagging me then, I guess. But we'll see. All right, guys. Yeah, no, exactly. It's too high for me, but if we can get that sort of plan of attack, and this could just be, it's consolidating these highs, stuck in the range between say 30 and 38. on the longer term that's going to break out. Don't want to see it break without forming a higher low, because I don't think that's brought in any. I always get skeptical of that kind of action. If it breaks through the highs from here, straight through the highs, I'm always skeptical it's just going to be a washout, and then we're going to get this, break through the highs, boom, straight back down, and you get cleaned up. Get up to the highs if you do something like this, and if you can see, we got through that high, or up here, there's your high put in place, pull back, got through, and then boom, we headed all the way back down to 31. I'm skeptical that's going to happen. But if we have some sort of decent correction prior to getting through 38 and sit and hold 35, then you're sort of front running a break of 38. And if it doesn't happen, you've got some sort of gains on the table, or you'll be able to lock in at least a positive trade or probably a break even trade. But if you buy it here, you're probably going to more than likely lock in a loss, a pure loss. I can't see that working out any other way at the moment. I mean, unless it just takes off and we're completely wrong, this thing just goes boom, off we go, then you'll be laughing all over the bank. All right, that's about it for today. So we'll call it a day. Thanks for joining me, guys. Any questions that I haven't answered or that you feel confused on, feel free to send us an email to support@tradesetup.com.au. I'll do another stream on Monday, and then I'll have the seminar, the webinar on, it's a meetup webinar on Wednesday the 11th. So feel free to join that. Come in and have a bit of a chat. I've got probably a more prepared webinar I'll do. I might even add to a few bits and pieces, but a lot of it you've heard different bits and pieces, but hopefully if there's anything you're questioning, we can clear it up. At the very least, the way I look at the market and the way I look at zones and why, and what that's showing me in the way of strength. But hopefully we can get across some good key concepts. It's worth watching. But yeah, feel free to join me. If you need the links, just email me and we'll get them out to you. All right, guys, have a great day, and we'll speak to you again soon. Cheers. Bye.